Hello there and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching yet another special edition of our ongoing pre-budget coverage. Now, over the course of the past few weeks, Moneycontrol has got you perspectives and wish lists from a whole host of top corporate and market voices. Today on the show, we've got a top voice from the world of deal makers. Joining us on the show today is Ajay Saraf. He is the Executive Director and Head of Institutional Equities and Investment Banking at ICICI Securities. Ajay, thank you so much for taking out time and joining us on this show today.
Good afternoon, everyone, and thank you, Ashwin, to have me on the show today.
Right, it's a pleasure indeed. So let's let's dive in straight, Ajay. The budget is around the corner, but it's quite an interesting macroeconomic environment as far as the balancing act is concerned when it comes to the FM Nirmala Sitharaman. Now, this will be the final full year budget under the Modi regime before, of course, the elections take center stage later. This is a time when there are global recessionary fears, there are global uncertainties in the environment. It's a high interest rate regime. And of course, there's also the fear of a comeback of COVID, especially because of the rise of cases in China and a few other countries. Back home, though, there seems to be a lot of good news for India because if you go by the RBI's financial stability report, the RBI has highlighted India's sound macroeconomic fundamentals, and they've also said that India has healthy financial and non-financial balance sheets. In fact, the IMF, Ajay, also recently pointed out, as you would be aware, that India is in a relative bright spot when it comes to the global economy. Now, as a seasoned deal maker, you've been around for several years, you've been with the ICICI group for 2 decades. As a seasoned deal maker and a market observer, how do you read the current environment and the factors that will weigh on the FM with the budget just a few weeks away?
Well, you have very largely captured all the current variables given the environment today. But additionally, I would think I'm in a camp where we think that the world will not get into a recession. There would definitely be an impact on the economic growth and the pace of the economic growth. So there will be a slowdown, but it may not kind of hit the recession button. We would also think that the interest rate tightening cycle globally will kind of see the peak by March, April, which means that going forward, the second half of the year will definitely be a much better year. And also, I would think that on the budget front, we expect development capex to continue to drive overall, government spend in CY23. Also, the policy initiative towards, further formalization of the economy, pick up in the investment cycle, and the policy focus on the boosting manufacturing. All of that will kind of continue. So, right. As I said, it's a pretty volatile year, which especially in the first half of the calendar year 2023, and from there on, I think it should settle down to be a very decent year for the next 6 months.
Right, Ajay, point taken. So basically 6 more months of some more pain and hopefully then things settle down for industry in the markets. Talking about the markets, Ajay, since the beginning of the year, FPIs, foreign portfolio investors, they've been in sell mode. They've been dumping shares worth thousands of crores. Now, of course, a lot of this may also be influenced due to global cues. But do you think budget 2023 can perhaps stem this trend in any way? Any big ticket announcements that perhaps FPIs are looking for, which would make them come back to India? It's a dynamic environment, of course, but anything the FM can do to lure them back and reverse this trend that we have seen since the beginning of January?
Well, you've mentioned earlier as well, is that India kind of stands out in the world map, right? In terms of its the growth profile, the demographic, the dividend, which is to be played out. So all of that means that the India as a market will remain on radar of most of the large foreign investors. And, what's kind of derailed it for the last 6, 9, 12 months was obviously the rate tightening cycle, inflations and stuff like that. It's not because of lack of any government policies for FPIs in India. So I would think some of these factors, as I stated earlier, start to recede in the later half of the year. You will see. So this would be a tale of two halves this year. Where you will see a pretty strong second half and kind of muted first half. And I would think that some of the policies with the government, getting a parity on the dividend and the buyback, is something which might help boost FPI sentiment towards India. But I guess most of it would be dependent upon how our growth pans out for quarter and quarter for the next few quarters. And if that kind of stands out, I don't think anybody would dare to ignore India and globally.
All right, on that optimistic note, let's shift our attention to deals and let's talk about Sarkari deals. Now, according to a recent report by Goldman Sachs, except in FY18 and FY19, disinvestment receipts in the last 8 years have fallen short of the budget estimates. In fact, in FY21 and FY22, the government achieved only 18% and 8% of its disinvestment target. So it's been tough going on the disinvestment front. Of course, there are external factors that play over there. One big deal that there's a lot of focus on, of course, is the sale of a majority stake in IDBI Bank. That has the backing of the government and LIC. The expressions of interest have in fact come in recently. Ajay, do you expect any major announcements in the budget when it comes to disinvestment deal activity? Keep in mind that only around 31,000 crores has been raised so far in the financial year. So, with the exception of IDBI, are you seeing any other budget-related triggers for disinvestment going ahead?
Well, last few years, we have seen that the government action on disinvestment has moved to a strategic sales. And you would have seen that strategic sales takes a bit more time. It takes time to kind of, do that disinvestment, get a strategic buyer in place. And in the past, we have seen that it got bogged down in terms of policies, laws, and all of that needed to be sorted out. And what we have seen now, especially in the case of IDBI, is that the government, various departments kind of coordinating. And before they launch the process, they've kind of, settled a lot of these prospective legal policy hurdles, which might come in a way of a prospective buyers to come into such transaction. So to that extent, this one is something which is as a welcome development, because that will expedite a lot of these disinvestments on a strategic side. So we would think that, coupled with normal, OFSs, where on the listed entity, people, the governments kind of come once in a while to come and do it. But overall, I think directionally we would see a smaller number. That is what our gut feeling is on the budget for what the government would expect out of the disinvestment.
Right. Now, Ajay, if we were to have this conversation, say, a little more than a year and a half back, there was one word that was reverberating in India Inc. Unicorns, unicorns, unicorns. And of course, I'm now referring to the entire startup and emerging business community. How things have changed over the course of the last year or so. There's been a tech slowdown. There have been layoffs. There have been job cuts. Several companies have struggled to raise funds. There have been down rounds. People are saying that expect consolidation in many of these segments because many of these firms will struggle to turn profitable. So it's a completely new world as far as the startup community is concerned. But it's also a community that the government, bets really strongly on. It's one of the pet themes of Prime Minister Narendra Modi, Startup India. What do you think the government can do in the budget specifically to spur deal activity in the startup community? In the past, we have seen tax ops. Do you think more of that should do the trick?
I would think, you said it correctly. Startup had a good run, last few years, partly because of the government encouragement policies, actions, and also because of easy money, it's kind of splashing around the globe. And you would have seen a lot of VCs, angel, Series A kind of a funding, which was pretty, you have seen quantum leap on such kind of funding. And I would think that going forward, you will see where, in the past you would have seen people only chasing growth. You would see companies calibrating the growth with profitability, and those kind of companies will continue to attract that kind of a strategy. Part to profitability kind of a strategy will continue to attract a lot of VC and private equity money. I don't think there's a dearth of that kind of money to back startups. And I would think the government on the policy side has been supportive, and they'll continue to be supportive. Tax might be one, but I would think easier, listing, environment for such startups is again something which would encourage a lot of, fundraise of these companies. So I would think that the good work the government is doing on the startup is a big focus area, and I would think a lot of rapid progress on that policy front there.
Right. Let's wait and watch to see what finally pans out in the budget. I have a related question to the startup community, but that's a little later in the show. You spoke about listings, Ajay, and that very nicely leads into my next question. Over the course of the past few budgets, there's always been this buzz about the government laying out the roadmap or the blueprint or the rules of the game for overseas direct listings. But there's been absolute silence, at least in the past few budgets. In the last year and a half or so, of course, during the heydays of the tech boom, the Indian markets have embraced a whole host of new age companies, tech companies. Some of them had spectacular debuts. Of course, some of them are also bleeding when it comes to comparing their stock prices now as compared to the time of their market debuts. But the Indian market showed that there is an appetite for such companies, and it was a huge step in that direction. And of course, it was a thumbs down for all the naysayers. Keeping that background in mind, there are still many in the industry, Ajay, who believe that there are certain niche sectors, certain assets of companies that can still be better valued in overseas jurisdictions, say more mature jurisdictions like the US. So do you expect any indication from the FM on overseas direct listings in budget 2023? Don't you think India Inc. should have that flexibility going ahead?
Yeah, great question. But Ashwin, Indian markets over the last 3-4 years have demonstrated resilience and maturity, towards new age companies, how to value such companies, the niche stories. And these are the stories which has come to the market, for the first time in India, has been received well. Obviously, such stories, and we have seen that they get attention in India. They might get lost in a larger market. So, it's like a small fish in a large pond. Is that kind of a thing which will happen to the Indian companies looking to list overseas? I would think, and we haven't seen very, too many great outcomes of Indian companies who have listed abroad to kind of give us, to say that, people will find that market a bit more lucrative. From the valuation perspective, we remains one of the, as I said, globally, one of the more expensive market, which means our PE, our way of valuing. So I don't see too much, kind of a value in seeing companies list abroad. But going back to your question, whether the companies should have options, certainly. I think over the next few years, I would think that these companies should have the option to list overseas. Though personally, I don't think.
But do you think this year is the year wherein maybe the government could give some sort of a roadmap, or do you think currently it's on the back burner and not really on the priority list of the FM and her team?
I would think over the next few years, this certainly be something which government would find, would put their attention to. I'm not too sure whether I'm not too gung-ho that this year budget will show a roadmap.
Right, point taken. Now let's shift focus to FDI. In the 2021 budget, that liberalized the foreign direct investment regime in the Indian insurance companies sector, to 74% from the existing cap of 49%. Ajay, is there more scope for liberalization to happen in any other sectors and for the caps to be relaxed to in fact attract foreign investors a little more, give them more options? And once you relax the FDI investment caps, that also leads to a change in status when it comes to many of these foreign domestic JVs, and that also leads to deals. So do you think there is scope for more relaxation in this year's budget?
There's definitely more scope to further attract FDI by increasing the existing caps, more policy initiative towards ease of doing business and stuff like that. Government has been making consistent efforts to reduce regulatory barrier, and we expect the government to continue with this development reform. In the current context, I would think that theme of India being an emerging manufacturing hub, a very strong manufacturing hub with a growing domestic consumer base, has gained prominence. And I would think policy action to happen around those themes. And we do expect the liberalization on the policy caps as well to keep on happening.
Right. Now, let's shift focus to a subject that is close to your heart. That's the equity capital market deals segment. Some stats for you over here. Around 59,000 crores were raised via 38 IPOs in 2022. But out of this, a lion's share was thanks to the mega LIC IPO, 20,500 odd crores, right? So that sort of skews the data to a certain extent. Now, according to data from Prime Database, this is much lower than the action-packed 1.2 lakh crores that was raised by 63 companies in 2021. In fact, it's not just IPOs, but also fundraising via QIPs and rights issues have dipped in the year that has just gone past. What can the FM do to provide a friendlier and a more hospitable regulatory environment or a policy environment to spur more activity in equity capital market deals, Ajay?
Yeah, just to give you a perspective, Ashwin, the calendar year 22 was indeed, a year where there was a slowdown in terms of volume. But just to give a perspective, it's the second best year after calendar year 21 in terms of number of companies coming for an IPO. So from that perspective, you would see that the interest of companies to come into the market for listing remains very strong. What has happened is the large value ticket size transactions may not have happened because FIs has been largely been absent in the market, and a lot of IPOs in FI 21, the large IPOs didn't make money for the retail investors. I'm saying that correction has taken place. So we do expect this momentum to continue in the current in the calendar year 23 as well. But in terms of what we expect from government, I think to continue with the policy of towards development and themes about development capex. That's what we think will happen. And themes about corporate and the government capex, real estate cycle, trade growth, and pocket of discretionary consumption to do well. So all of that means that calendar year 23 will be incrementally stronger year than the previous year. It may not be anywhere close to what we have seen in calendar year 21. I would think we should take calendar year 21 as a kind of a bit of an outlier. But if you see the last 5-year data, the last year data was not bad at all.
Sure. One final question before we wrap up, and this is a segment that has been really, really active when it comes to M&A activity. Private equity funds, you've got the Middle East funds, the pension funds, the sovereign wealth funds. All of them have been really gunning for Indian assets and Indian companies, and most of them, in many cases, edge out the strategic suitors. So they are now the new strategics. Many of them have struck deals last year. Quite a lot of them are also majority stake sales. So that's a very important investment community that is pumping in money into corporate India and the markets. Some of them, of course, also invest in the public markets as well. Now, in September, the Finance Ministry had set up a high-level panel that was headed by former SEBI chairman M. Damodran. And the mandate of this panel was to address issues being faced by private equity funds and venture capital funds. And from what I understand, they've submitted a report already to the government, and they have recommended certain tax-friendly proposals. So that is something that we are hoping, or the VC community is hoping, will be implemented in the budget. How do you expect the government to respond to this report, A? And how can they encourage more deals and investments from the private equity community, Ajay? Any specifics?
So, if you see, and you correctly said, the entire VC private equity space has kind of exploded over the last 3-4 years, and a lot of private equity, large global private equity guys, their style of investing has changed from a large minority now to a buyout situation where they want to own the majority of the company. They want to run that company, get professional management. I think that's the preference for large. Though you have also the mid-size private equity guys who are still willing to do a minority stake, and there are these VCs who do startups and stuff like that. So you have different models. And what has happened, Ashwin, is over the years we have seen that the entrepreneurs in 90s and 2000s were in a way debt led startups where you get help from the banks to kind of get your loans or the working capital loans done easily, and then used to kind of back of that you need to grow, put up the manufacturing units, and that was a model which doesn't exist anymore. So it would be in a way equity led, and when you say equity led startups entrepreneur journey, you would have a very big part. The VCs and private equity guys have a very big part to play in that journey, and anything which make them these investments more conducive. I'm sure everybody would be working on policy initiatives to kind of make it a bit more easier for these guys to invest. Though I think most of it is already in place. Maybe there would be some incremental policy actions, which, as you said, the committee has working on it and would recommend, and the government would take a considerate view on that. But I would really think that this segment holds a future for an entrepreneur journey into creating large value for himself and for the shareholders.
Absolutely, you hit the nail on the head. I'm going to slip in one last question, and Ajay, I would like you to stick your neck out over here. Name one single most important reform or proposal that you expect from the FM in this year's budget that can encourage deal activity. I want you to stick your neck out.
Well, I wouldn't say one. It's very hard to say one. I hope something on the capital gains doesn't happen. There's no truth. Increase in the capital gains tax. I think that would be a lot of a relief and a boost because there's a lot of people have been worried about, and there's been news reports about on that factor.
Constant worry every time before the budget.
Yes, and then that's I don't think government has been working, and it's not only budget. I would think throughout the year you will see policy actions. So to me, budget itself is not it's just not one big day where all the policy actions takes place. This government has shown that they do it throughout the year whenever is needed and whenever they are ready with their view. So to that extent, I would think is a policy, reforms, policies are an ongoing initiative and not a one big bang day work.
Fair enough. Ajay Saraf, it's indeed been a pleasure talking to you. Thank you so much for taking out time and sharing your pre-budget views on Moneycontrol, and all the best to you and the ICICI Securities team in the coming year.
Thank you, Ashwin, for having me here. It was a pleasure. Thank you very much.
Right. On that note, it's a wrap on this pre-budget special show that was brought to you by Moneycontrol. My name is Ashwin Mohan. I'm signing off. Stay tuned to Moneycontrol for more news, views, and updates.